Welcome back to the Deep Dive, where we really try to cut through the noise for you.
Great to be here.
Today, we're diving into something really critical for a lot of licensed professionals, especially our colleagues out in California. We're looking at the strategic choices around forming a professional corporation. Specifically, the ins and outs for California psychologists setting up a professional psychological corporation in, well, looking ahead to 2025.
Yeah, it's a crucial planning point.
And to make this really hit home, we're using a real-world scenario. It's based on a client Q&A that honestly brings these ideas to life so well.
Those practical examples are always the best way to understand complex stuff.
Exactly. So picture doctors Alex and Maria Valdez. Married couple, both licensed psychologists in California, really respected.
Yep.
Maria's a specialist in trauma therapy. Alex, he's more in the consulting and forensic psych world.
Different income streams there, probably.
You got it. They're juggling multiple 1099 income streams.
Right.
Independent contractor income, not regular W-2 jobs. And with that comes, well, growing tax complexities, and they're starting to get concerned about liability too.
That sounds familiar for a lot of professionals.
It really does. They need to figure out the best structure, how to be efficient financially, but also have, solid legal protection. It's such a common challenge, and we want to tackle it with you today.
And that's really our mission here for you, the listener. By digging into the Valdez's questions, the practical stuff, we want to pull out insights that don't just show the benefits or the structure.
Right.
But really explain why it all matters. We want to show you how these choices can, empower your own professional path, secure your assets, give you peace of mind.
Turn tax worries into maybe resources for growth.
Exactly. It's about being strategic.
Okay, let's unpack this then. The foundational question, I guess, has to be why? Why should California psychologists even think about forming a corporation? What's the real strategic upside?
Well, it boils down to a few core advantages, and they directly tackle those challenges we just talked about, like the ones the Valdez's are facing. First off, and this is a big one, tax optimization. Significant potential there.
How does that work practically?
So if you structure it right, especially if you choose S-Corp status with the IRS, that's an election you make.
Right, an election.
You can split your income. You pay yourself a W-2 salary. That's got your usual payroll taxes, Social Security, Medicare, all that.
Standard paycheck stuff.
Exactly. But then any additional profits, you can take those as distributions.
Oh, okay.
And here's the key bit. Those distributions are generally subject only to income tax. Not that extra, roughly 15.3% self-employment tax that 1099 folks usually pay on all their net earnings.
Wow. Okay, 15.3%. That can add up fast.
It really can. And think beyond just the number. What could you do with that saved capital? Invest in your practice, maybe get some new tech, training, beef up retirement savings. It turns that tax line item into something potentially productive.
Makes sense. What else?
Then there's liability separation. This gives a lot of people peace of mind.
How so?
Well, a PC, a professional corporation, can shield your personal assets. Think your house, your savings.
Okay.
From business claims. To a degree, anyway. Now, this is super important. You have to understand this. It does not protect you from your own malpractice, your professional negligence. That's still on you.
Right. Personal responsibility isn't erased.
Not at all. But it does offer a crucial layer of protection against other business debts or liabilities. Or, importantly, say, malpractice committed by an employee or maybe even a co-owner in the same corporation. That's a huge comfort when you're pooling efforts like they are.
Got it. That's a significant difference.
Definitely. And for people like the Valdez's juggling multiple 1099s, a PC lets you consolidate all that income.
Ah, simplifying things.
Big time. Instead of tracking income from 5 different consulting gigs separately, it all flows into the one corporate account. Makes bookkeeping, and especially tax time, way less of a headache. And finally, don't underestimate professional image. Having Inc. or PC after your name. It lends a certain credibility.
Especially in some fields.
Yeah, particularly if you're moving into consulting or forensic work like Alex. That perceived professionalism can actually be a differentiator, helps you stand out.
So thinking about those benefits, the tax savings, the liability shield, the simpler finances, the image boost, maybe pause and think, which of those really resonates most with your situation right now? Often it's a mix, but usually one really drives the decision. Okay, so those are the general upsides. But California, Well, California often has its own way of doing things, doesn't it?
Oh, absolutely.
And for psychologists, it's not just a minor difference. It sounds like it's a whole different set of rules. This is where it gets really interesting and very specific.
It absolutely is. Look, in California, if you're a licensed psychologist and you want to practice through a business entity or own a majority of one, you must form a professional psychological corporation. That's the bottom line.
Not just any corporation, no LLCs.
Nope. General stock corporations, LLCs, they are not allowed for licensed psychological practices here. It's quite definitive. So for a lot of people, especially if you're a solo practitioner wanting 100% ownership, this professional psychological corporation is literally your only valid option if you want corporate benefits and compliance with state law.
Wow. Okay. Only one path there. But you mentioned collaboration. Does that mean others can join?
Yes. And that's where it gets interesting again. While the corporation has to be majority owned and controlled by licensed psychologists, California law does allow you to bring in certain allied professionals as minority shareholders.
Allied professionals, like who?
Well, the list includes folks like licensed physicians and surgeons, registered nurses, LMFTs, licensed marriage and family therapists, LCSWs, licensed clinical social workers, licensed acupuncturists, even licensed midwives.
But there are limits.
Oh, yes. Key constraints. The total ownership by all these allied professionals together can't be more than 49%.
Less than half.
Right. And the number of allied professional shareholders can't be more than the number of psychologist shareholders. It keeps the focus on psychology, but allows for some really useful multidisciplinary setups.
That's quite specific. And speaking of specific California rules,
Yeah.
It seems like every little detail matters, even the name you pick.
You got it.
Tell us about this name style rule. Why would the state be so strict about, just the name of a practice?
Well, this really gets to public trust and clarity.
Yeah.
California has this very strict name style rule for a reason.
Yeah.
Transparency.
Okay.
The official name of your corporation, and actually any name it uses to provide services like a DBA, a doing business as name, must include certain approved words. We sometimes call them the magic words.
Magic words, like what?
Things like psychology, psychological, psychologist, psychotherapy, psychoanalysis. There's a list.
Okay, so one of those has to be in there.
Yes. And on top of that, the name also must have a corporate ending, like Inc., Corp., PC, or the full phrase, a professional corporation.
Why enforce that so strongly?
It's about distinguishing licensed, regulated professional entities from just any business out there. It signals that this practice adheres to specific ethical codes and state oversight. It's not just red tape. It instantly communicates legitimacy and professionalism to the public. That matters in a place like California.
That makes total sense. So, given those rules, what about branding? Like, say Maria Valdez wants her practice known for trauma recovery psychotherapy. Can she use that, or is she stuck with something generic like Valdez Psychological Core?
No, she absolutely can specialize her branding. That's exactly what DBAs doing business as names are perfect for. Your official legal name might be, say, Vision Psychological Services, PC, kind of formal.
Right.
But then you file a DBA to operate publicly, to market yourself, as trauma recovery psychotherapy. It lets you build a specific brand identity.
But wait, does the DBA also need the magic words?
Ah, good catch.
Yeah.
Yes, it does. It's crucial. Even the DBA has to comply. So trauma recovery psychotherapy works because it includes psychotherapy. You couldn't just call it Trauma Recovery Center.
Got it. Now let's circle back to the Valdezes. Two psychologists, married. Can they actually operate under just one corporation? How does that work?
Yes, absolutely. It's very common, often really beneficial.
And the ownership, does it have to be 50-50?
Nope, it's flexible.
Yeah.
Could be 50-50, 60-40, whatever they agree on, as long as all the owners are licensed professionals allowed in that field, in this case, licensed psychologists.
So for the Valdezes, pulling their separate 1099 incomes into one PC.
Right. They decided to funnel all that non-W-2 income into that single entity.
And the big benefits being?
Simplified taxes is huge. One entity to manage instead of two sets of independent contractor books, potentially. And importantly, it generally enhances their overall liability protection by consolidating the business operations.
Okay, let's drill down on that liability protection again. You mentioned it protects personal assets from business claims.
Correct.
But not your own malpractice.
Absolutely critical distinction. Your professional judgment, your clinical decisions, you are personally responsible for those. Malpractice insurance is key for that.
So given all that, professional liability insurance, it sounds like it's not just a good idea, it's essential.
Non-negotiable. Absolutely fundamental.
What's the right way to set it up for a PC? Any common pitfalls?
You absolutely must get a professional liability policy. Errors and omissions or E&O insurance, specifically in the name of the corporation.
Not just in the individual doctor's name.
No, the policy has to name the PC. Then, your insurance broker needs to make sure that all the licensed professionals working under that corporation, like both Drs. Valdez in their case, are individually listed on that same policy.
So it covers the entity and the people.
Exactly. Both the corporation itself and each individual psychologist are covered.
And a common mistake is just assuming your personal policy covers the business.
Yes, or vice versa. You need that policy, specifically naming the PC and listing the covered individuals. Precision matters here.
Okay. Let's shift gears a bit to the money side, the financial core. Those tax benefits, especially with the S-Corp status.
Right, the potential savings.
We touched on it. Sounds great, paying less self-employment tax on distributions. But what's the catch? Is it really that simple, or are there hoops to jump through? What does it really mean for your bottom line?
Yeah, it's a great question. The benefits are real, but you're right, there are crucial steps. Electing S-Corp status lets you split your income, like we said.
Salary and distributions.
Right, you pay yourself a W-2 salary, reasonable salary, we'll get to that with all the usual withholdings, Social Security, Medicare, income tax.
Okay.
Then the leftover profits can be taken as distributions. And those distributions, again, generally aren't hit with that extra 15.3% self-employment tax, just income tax. So the savings can be very real.
But there's a big but coming, isn't there?
There is. And it's the IRS requirement you hinted at. S-Corp owners must pay themselves a reasonable salary before they take any of those tax-favored distributions.
Reasonable salary. That sounds subjective. How do you figure that out?
It can feel subjective, which is why the IRS looks closely at it. They want to make sure you're not just paying yourself, say, $10,000 a year in salary and taking $200,000 of distributions to dodge payroll taxes.
Right. So how do you defend your salary number?
That's where the reasonable compensation analysis comes in.
Okay, tell me about that. Sounds important.
It is. It's basically a documented process. Usually you'd work with a good CPA or tax pro on this.
What does it involve?
It aims to figure out what someone in your position, with your qualifications, experience, in your location, doing your job, would reasonably earn as a salary on the open market.
So comparing yourself to others.
Exactly. It looks at objective factors.
Yeah.
Your education, licenses, years you've been practicing, where you are geographically, your actual role and duties in the practice, and importantly, market data. What are comparable professionals actually getting paid? Your CPA helps gather and document all this.
And the point of all this documentation is...
If we connect this back, think of it as your audit-proof shield.
Oh, okay. Protection.
Right. It provides strong justification for the salary you've set. It gives you confidence that you're playing by the IRS rules, structuring your income efficiently for taxes, but doing it correctly and minimizing your risk if the IRS ever asks questions.
Yeah.
It's about smart, proactive financial management.
Wow. Okay. It seems really clear that for California psychologists, whether you're just starting out or maybe shifting into consulting like Dr. Valdez, a PC can be a really powerful tool.
It absolutely can be. A very strategic structure.
If, and this seems like a big if, it's set up correctly and maintained properly.
That's the key takeaway. Doing it right from the start and keeping up with the compliance.
It really feels like digging into the Valdez's situation showed just how practical and strategic these decisions are.
Absolutely. It's not just about ticking compliance boxes. It's really about actively shaping your professional future for security, for financial efficiency, and hopefully for sustainable growth down the line. Understanding these structures gives you that foundation.
Gives you control.
Exactly. Control and opportunity.
So, as we wrap up, maybe here's a final thought for you, the listener, to mull over after this deep dive. How might getting proactive about these kinds of structural decisions for your practice do more than just secure your present? Could it actually open up new doors, maybe new collaborations, different service offerings, especially as the field of psychology keeps evolving?
That's a great point to ponder. It's about building for the future.
Definitely something to think about. Thanks for joining us. We'll see you next time on The Deep Dive.